Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Welcome to your weekend edition of your Agriculture Update for this Friday, and we're at the 23rd of February, 2018, just after 2:10 p.m. Central Standard Time. Well, we saw the president talk today, talked a little bit about trade deals, still threatening the NAFTA deal, put more sanctions on North Korea. He had the Australian Prime Minister on TV with him late this afternoon, and if you saw that, he gave his reasons for not joining certain pacts of trade with Australia, not them directly, but the groups, if you will. And the question is, where does that go? We'll find out. The market doesn't mind it. You can see you're closing out the week on a good, strong note. Metals are not getting a bid off of anything they're seeing inflationary. The dollar slightly higher against the Swissy and the euro, but against the pound, the market is, as you can see right here, the dollar's down a fraction while the yen, you're pretty close to nothing in that market. You had another day where, if you take a look at the agriculture sector, the soybean sector is still being propped up by the problems in Argentina. For those of you that may not be keeping up with that, Argentina's a primary factor in the world's soy meal. And they're big crushers. They produce a lot there, a lot of soybeans, obviously. And what's going on there is they're getting hot, dry weather, and it's coming to the end of the growing season, so the damage being done in many areas is not reversible. So the yields are dropping. As that happens, the market looks outside of Argentina, who can supply the goods at what prices and so on. So you're getting a bid in the soybeans. The meal market has gone up. Today you saw some profit taking on it, and as the meal came down, the oil got a little bit of the lift. Sugar market backed off today, down about 12 on the day. Energy prices still up overall. And we're looking, if you watch it, the notes, you're seeing a little bit of a bid come into the 10-year notes, which when you get a bid into the futures, it means the yield's slipping a little bit, and the stock market likes that. When we put the monthly bar chart of soybeans up, I had these showing for you. This is how we came into the month. Now remember, we're getting ready to leave the month of February. And I had these lines of resistance up here, support, and as you can see, you're breaking out to the top side of all this. How far that will carry, I couldn't begin to answer you. What we wouldn't want to see is last month's low taken out, obviously, but as long as the pattern looks like this, I think that what we can label this, is going to be an upside breakout on the monthly chart. On the weekly chart, you can see how the pattern has just carried this market higher. You've now gone up almost $1 a bushel, and a lot of this is due to what's going on in Argentina. The market caught its traction, as you can see, in 2018, and in January through February, this market has done very, very well. You get to see that on the weekly chart. You can see how the past weeks, this is this week, the week before, so on. This all began right in through here, and this market has just been looking higher. It's also got the proper bullish pattern of higher lows and higher highs. This week didn't confirm that. Last week did, and this market's just moving higher with all that. We are over both the 100-day moving average of closes and the 18-week, did I say the 100-week moving average of closes and the 18-week moving average of closes. When we go to Bollinger Bands looking for resistance, you went up to it last week, popped through it, and you're carrying through. That could make this an important bottom. And it would mean getting back through all this gets very, very difficult as you look at it. Now, the interesting part is that I looked at the USDA forum reports that was taking place this week, and they are not predicting beans up this high. So it gets to be very interesting after the Argentine situation. We carry this up, and maybe our crops, we're going to produce more, and the prices come back. But if you read my literature that I write, you're nowhere near prices like this that they're predicting for the year. Yet, on the weekly charts, I argue that this is now a base because you're over it, and until you get back into this area and probably take out 967 3/4, that this market is just continuing to try to push out of this trading base. It is upside momentum. I don't look at overbought and oversold conditions on the weekly charts. I use the daily for that. In the meal market, even though the market backed off on the daily chart for the week, you closed up $2. You broke out, and you can see what happens when you start these breakout periods. Here the market tried to break out, got thrown back, went back up on the week of the 9th, carried through, and now you're still carrying through. And that's what I say happens when you're trying to break out of these bases. Take out 326.20, you negate a lot of that, but you'd really have to get back under all this in order to say this market's bearish again. Momentum still pointing to the upside, and soybean oil is coming alive a little bit here. The momentum to the downside has been lost. As they're taking off in the daily charts, some of the meal oil spreads, this market's lifting. It has pretty stiff resistance at 33.26 to 21 on the weekly charts, but I'm concerned that that momentum's being lost. I would still look to see if there's sellers up if the market can reach there. In the corn market, similar to the soybeans, you've had the soy products going, well, actually the corn market going sideways, and momentum is still bullish. So we're getting that commodity play in here that the grain markets are looking better and better over time. And the sideways action certainly helps to support higher prices. The wheat market is still very much in the sideways action, and that's bordered by the upper Bollinger Band and the lower band. Momentum is up but waning. You can see how the red line is just sort of going sideways now as prices pulled back a little bit, but the pattern is still one of higher lows and higher highs. Yes, you hit the upside resistance, you back off from it, but you're still looking overall good. Cocoa market coming alive to the upside. Looks as though it might be ready to challenge this whole area here of 22.55, the upper Bollinger Band. Remember what a Bollinger Band is? A Bollinger Band's an algorithm, by the way, that is designed to keep the market trading within it 95% of the time. Now, I think that the art of using it isn't just if it hits it or not. It's a bit more than that. You start looking to see, are you getting sideways action within those bands? And yes, they can narrow in and widen out. But if you're going to get this commodity play that so many are looking for, including me this year, where inflation is going to drive commodity prices higher, you look at these and you say, hey, I see a longer-term trend in play. Higher lows, higher highs over the 18-week average of closes. Momentum still pointing up. Those are the targets, and from where you're at, another 50 to 100 points. In the sugar market, is it going to get going? That's the big question. On the weekly chart, you've run out of downside momentum. You're just sort of flattened out. A close over 1430 is needed to get this market coming alive. What you may not want to see is the market take out last week's low, which was 1330. But if you get over 1404 on the current pattern, you'd have higher lows, then higher highs. The key is to get that all coming together over that 18-week average. I hope I didn't say day again. Over that 18-week average of closes, and that would probably kick your momentum up. Let's assume I'm wrong. And let's assume the market goes down, gets under that 1330. The next stopping zone could be 1285, the lower Bollinger Band. And it's not wrong or right. I'm just giving you two parameters. In the coffee, you got down to that lower Bollinger Band. And again, the first time you hit Bollinger Bands, often, not always, often, and you can see the word often here. I think you'd agree with me. It acts as a resistance point. Doesn't necessarily cause the market to go down and reverse trend. No, that's not necessarily what it does. But I think that what it does do is it activates where professional traders lighten up positions. And they are always looking to see, are you getting that sideways action? At least I think they are. And can you bust out of that and create another, if you will, downside thrust in the market or upside momentum in the market? That's what I think they look at. In the cotton market, if we take a look at what happened here, momentum started turning down right at this point. You got a pattern of lower highs, lower lows, which puts into play the potential for the 18-day average to offer some support. The market comes down on the week of the 9th. Market goes down again on the 16th. And challenges it again and comes on up. No surprise there. Do we have a trend? We don't. You've got the swing line down, prices refusing to close under the 18-week average of closes, resistance still the 84.90 level, and momentum has gone flat on you. In the cattle market, here you are on the weekly chart at the top of a Bollinger Band, and you just got some bearish news. In theory, this should take this market and put some pressure on it. We'll see if that happens from the report. One thing I will tell you about these cattle reports recently, I've looked at the last, 3 or 4, and I thought that they were actually a little bit more bearish than the market did. So now the question is the market going to come down? If it does, I'd look for the 121.65 level. The real key here has been that the feedlots are able to get cheap grain prices. Yes, we're looking at wheat go up in price. We're looking at meal coming up because of the situation in corn. But on a relative basis for where cattle prices are, get serious. There's still nice profit in a lot of that. In the hog market, hogs ran out of its momentum against that upper Bollinger Band area, slipped back, got into the numbers game of the 100-week average of closes in green, the 18-week, and now the key is what does it do here? Should it break under 68.02 and close under that 18-week average, you start putting a top into place and momentum coming down on a chart at least to 59.92. Is there anything that can kick the market back into an uptrend here? The answer is no, not on a charting basis, unless you had what we call an outside week, where you first come down, take out the lows, and close back up for the week. I don't know if that'll happen, but I don't see it at this point. So I put that all together, and I think we have a pretty interesting market. And I think that what you want to be looking at real hard is how many top analysts are talking about the fact that they think the commodity markets were the play. I was watching Double Line today, and the CEO speaking, and I think he's a phenomenal trader, of course. And they asked him what his key play for the year is. And this was this morning on CNBC, and he said commodities. I understand why. It's a question of it all coming alive. You know, you all think sometimes of commodities as gold, silver. It's not necessarily that way. It can be the commodity group as a whole. We write on this group. We have staff that just writes, and you know the beauty is with a lot of firms, they don't bring in their staffs to the weekend. We have our staffs, and by the time the grain markets are going and so on, you get a pretty good feel as to what we're thinking about the market. I'll give you an example. I just said you have a cattle on feed report. We're going to have detailed analysis on it out probably in the next 30 minutes. The markets are closed, so you don't have to worry about the impact, but it'll be detailed. How do you get it? Either give us a call, go to our website. You can sign up for the Linn Research, and you get a free trial to it. You can click up here, and you will see if you're watching me on YouTube, it'll take you to those forms, or under us on many websites. It says, click here for Ira's free information. I'm Ira Epstein, wishing you all a great weekend. I will see you come Monday. Take care now.